So next week is a big week in the stock market for me. Next week it's going to be a week where I could lose thousands of pounds or I could actually make thousands of pounds. So we'll see what happens. And you'll notice this video is on a Sunday and I don't normally do weekend videos, but what I thought I'd do is I'd move the Monday video to Sunday, so there'll be no video tomorrow. But I wanted to bring it a day forward because it's quite time sensitive. And if I brought it out on Monday, this video would have only been relevant for the next kind of 2 or 3 hours. Whereas bringing it out on Sunday, it's more relevant for what's going to happen next week. Because next week, one of my biggest holdings, one of my top 5 holdings, is going to report earnings. And we've been in such a big position, that's what's going to make me lose either a lot of money next week or make me a lot of money next week. So we'll see what happens. And I'm sure some of you guys can guess which stock that is. So without wasting any more time, let's get into what's going to happen next week and the stock that's going to be making a big move for me next week. Let's get started. Now, just to shout out, I did drop 2 exclusive videos this week on the Patreon. If you do want to see more exclusive videos from me, join through the link in the description. Only £5 a month. And on the Patreon, we did look at Talafka on the stock request. We also did a review of earnings with a few companies that I own that reported earnings this week. And also just a quick thing that I want to mention, Simple Wall Street. I had someone ask me about Simple Wall Street and how they get a discount, because obviously you see that I use it a lot in the videos. I've used it for years. Even before I had an affiliate link, I used to pay for it myself, and I think it's a great platform. And a few people have been asking me how they can get a discounted code for Simple Wall Street. So if you actually go in the description here where you can join the Patreon there, and you can get some free shares from Trading 212 there. If you join through this link here on Simple Wall Street, you get a 14-day free trial, and I believe during that 14-day free trial, they will send you either a 30% or a 40% discount when you get towards the end of the trial. So for any of you guys that want to join Simple Wall Street with a big discount, that's the place to do it, because I know a lot of you guys have been asking and they've changed the process, how the free trial and discounts offered. Normally it was the free discount right at the start. Now you've got to start the trial and wait for the discount code to come through by email. So keep an eye out for that one. Anyway, let's get on to this week. So it's another big week of earnings. It seems like this week is going to be more focused on individual stocks that are more growth orientated and smaller market caps as well. So with that in place, I think this is where you're going to start seeing the bigger moves come from earnings season. Some of these stocks have the ability to move 10, 20, 30% on earnings, up and down, and I've got a few of them to talk about today. So there's going to be a lot of individual stocks that I'm going to talk about today. I think I've got like nearly up to 10 stocks I'm going to be talking about today. So I know a lot of you guys like the videos where I quick fire through a lot of stocks. This is one for you guys today. So on the Monday, we've got Domino's. I think that's one of the best performing stocks ever, actually, on a stock market point of view. We've got Berkshire Hathaway, which obviously I've reported. I don't know if you saw the numbers on the weekend. Very impressive from them. Unity, I've got to say, I have never been able to get the point of this company. I mean, if the growth is okay, but the losses they throw off are just absolutely insane. And even if you start valuing it off a free cash flow point of view, it's like 40 times free cash flow, and that's off the end of this year's numbers as well. I've just never been able to get my head around people that rave about Unity stock. It's just never been a one for me. Zoom are going to be reporting. I've got to say, there's a point, isn't there, where I look at Zoom and I think, oh, it's one of those that's kind of thrown in the basket of, oh, it's just a stock that benefited from the CV situation. It's a dead stock that you're never going to own. It's gone from that one extreme to another where everybody wanted to own it, and now it's in the basket where everyone goes, it's just a COVID stock, you don't want to own that stock. But you look at the business, I mean, they're still doing okay from a profitable point of view, and it's now a household name. I've got to say, I look at the EPS growth, it looks pretty impressive, and it's I think it's trading at like 13 times forward earnings, which isn't too bad. The only thing that puts me off with Zoom is that it's just not growing at decent rates. Now, obviously, it's had so much growth pulled forward, but I would hope for it to grow more towards a high single-digit percentage range, and it's still like 2 or 3%, which I think is a little disappointing. If Zoom was able to grow a lot more, I reckon it could be one that's been sold off way too much because people are thinking it's just a dead stock now. You know, there's so many, it's still making a lot of money. It's still a 19 billion market cap company. So yeah, I always keep looking at Zoom as maybe a potential one to own because it's still a relatively good business from a revenue and a profit point of view, but they just don't have the growth that I'd hope them to have. So yeah, until that kind of happens, I always have a quick look at it. I never go much further than that. Workday, Hims and Hers. Obviously, that is the big one that's going to be reporting on Tuesday. I probably will do what I normally do. DraftKings and Hims and Hers is the two earnings that I do like a big full breakdown video on. I probably will do a Hims and Hers video on Tuesday breaking down the earnings, unless it's not much in there, but I reckon it will be with it being the end of year results. So yeah, we'll talk about that a little bit more towards the end of the video, with it being the big one. iRobot are going to be reporting earnings. I don't know if any of you guys want this. This is pretty impressive. Any of you guys used to watch my YouTube channel when I used to own iRobot? Shout out to you guys, by the way. So iRobot was a stock I actually bought during a dip in 2018. That was a time when the company started facing more competition. There was more of them cheaper alternatives coming in, and I thought, you know what, I like this opportunity here. I bought the stock in there. I actually made over 100% on the stock, which was absolutely amazing, and then I sold it off. And then during that time frame, it's been the whole kind of CV situation. The stock then rallied up again, and then since then it's just been hurt with a lot of the environment that we're in, sales being brought forward. We saw the cheaper alternatives, the consumer spending cut down coming in. For so long, everyone's kind of like being like, oh, we're just going to wait for Amazon to buy out because Amazon agreed to buy them. And then it turned out it was blocked, which was crazy to see that the deal for Amazon to buy iRobot was not allowed. And I was like, wow. That's absolutely insane, because everyone's assuming it's going to go through. Everyone's waiting for it to buy out. I think since then, actually, the CEO's even left the company, because I think he was like, oh, I'm just going to take my cash out now from Amazon buying us. And he was like, oh, well, I don't actually want to work anymore. We're kind of like, you're that sure it's going to go through that everyone kind of like stops putting his, the 100% effort into the business and goes, yeah, it's Amazon's issue now. And when it ends up getting blocked, everyone's like, whoa, we weren't expecting that. So this acquisition's probably actually very much destroyed iRobot as well as a business. Now it's not being allowed through. And I've got to say, of all the kind of acquisitions that you see and you go, I don't know how that one was allowed, or things that go on inside businesses, that this is the one that was actually blocked. It's like, it's not really one that kind of makes sense, I thought, anyway. So yeah, that's iRobot. Anyway, we've got Tuesday, Lending Tree is going to be reporting. They're quite a volatile one. AutoZone's going to be reporting. Macy's are going to be reporting. After the close, First Solar, it's definitely not looking that good for solar companies still at the moment, I've got to say. Beyond Me, we've gone from iRobot, that was a company that did really well from us, to one of my worst ever performing stocks. Beyond Me, this was an absolute stinker. I've got to say though, people sometimes forget this. I did sell 20% of my position after the Pepsi deal in 2021 for a good, what was it, 67% gain. So there was profit made at certain points on this, but it definitely wasn't enough profit to make up the losses on Beyond Meat. Yeah, this was one of my worst stock picks ever. Company signed a lot of partnerships that you think were going to kick on. They never kicked on. The competition came in, and then the inflationary pressures hit them, and they've struggled. Looking at the forecast as well for the business, I was like looking and thinking, if they're a bit optimistic on the CPS guide, but we'll let them off. And really awful numbers as well this year. I think last year they were expecting to grow like 10% at the start of the year, and it's actually gone to 20% decline. And this year they're expecting to go up to, well, not much growth, but a little bit of growth here, better than 19% down. And I was like, I don't know if that will happen. I think that they're struggling competition-wise. The consumer environment, people aren't buying these alternatives at the moment with the consumer environment in. Everyone's just happy to get the cheapest product out there. It's not a good environment for Beyond Meat, and my expectation would be is that they give a guidance that's a lot lower than what analysts expected, and that drops even lower. So yeah, maybe I could make some of my money up by having a short position on this one, but hey, I don't do that sort of stuff anyway. On Thursday, we're going back to another good performer, which is Celsius. Celsius has been a very good performer for me. One of those stocks that I prioritised buying in 2022, buying high quality companies on big dips. And that's what Celsius was. It was a stock that had fallen about 50% after some fantastic numbers, went to a relatively cheap valuation. And since I was making a lot of videos saying I'm buying Celsius stock, I think it's going to be a very good performer, as you can see here. Yeah, the stock did absolutely amazing. And from that time, if anyone was able to buy it, well, obviously there's been a stock split since then as well. But if you were able to buy in that $15, $16, $17 range when I was making those videos, the stock has been absolutely amazing, especially if you got down at the lows. It's up 337%. So anyone that bought that one did absolutely amazing. It was a stock that I owned. I at points was selling it out for over 100% return, which is really nice. And I actually got to the point of view where I saw my position out, and I looked back on it and I went, you know what? I don't think I should have sold that position, and I now own some more shares back in Celsius. So yeah, that's another big number, another big earnings for me anyway that's going to be coming up. I'm still trying to find Celsius in the UK. Obviously they've expanded to the UK in the last month, and I've still not seen any products in the supermarkets, but I'm going to keep an eye out. Looking at expectations, looks like we should have a good guide on an EPS. I think they could even come in a little bit higher than this. And from a revenue point of view, I wonder if they're going to hike up a little bit more. I'd like to see Celsius get into that 40%, 50% range if they can. So I'm hoping the guide for really good numbers as well. So we'll see what happens with Celsius. And I've just realised that I got so excited talking about Beyond Meat, I actually skipped a few of these out I was going to talk about. So Lemonade was one of the stocks that was really popular during the whole 2021 time frame. That stock went absolutely crazy, and that's sunk down massively. So I've never got into Lemonade. I just think once again I look at the company and going, the losses are just way too much. It's just a company that hasn't really interested in me. Splunk, that was another really popular stock. You know, that was everywhere on the YouTube scene a few years ago. Did really well after its IPO, and then it just absolutely sunk. I didn't even realise, to be fair, that they're actually getting bought out by Cisco, which I only just realised after doing this slide here. I was like, that share price has been really stagnant for like the last 6-7 months. That's normally when an acquisition or they're being bought out, and yeah, that is what happened. I mean, to be fair, anyone that has bought in the last year is absolutely laughing, but anyone that's been buying through that time frame for the last kind of couple of years will be like, oh, I've just basically got out break even and I've had my money tied in this stock for 5 years. That's a bit frustrating. So yeah, it's funny acquisitions like that. Sometimes if you're in at a low price, you go, yeah, that's absolutely amazing. That's a really good stock I've owned for a year. And sometimes some people that have been holding it for many years go, well, that was a waste of time. So yeah, Virgin Galactic, I have a funny story about this actually. I was at a party about 2 weeks ago, and a few people there know I like my stocks, and somebody was saying, oh, I'm thinking about getting into stocks. My friend says I should put a lot of money into this Virgin Galactic, and I was like, no, and don't talk to your friend that's telling you to do this ever again. I was like, don't buy this stock. And I still see this now. I still see a lot of people interested in buying it, and I'm like, tell me what's interesting. Like, if it was just some money, like you are happy to completely lose, then yeah, go for it. If you want to stick a 20-30 quid in here and you don't mind losing that 20-30 quid, go for it. But anything more than that, why are you touching this? Like, there's so many flaws with the business, and even if it comes what it's supposed to do, it's not going to be a major business, and the money they're throwing off is just absolutely awful. Like, I just don't know how people are interested in buying this one, but yeah, crazy. Anyway, I missed them free out after talking about Beyond Meat that I was supposed to talk about. Wednesday in the morning, not too much. Wednesday after close, not too much I personally are interested in. I know a few people like Snowflake, and I know a few of you guys are invested into it. Salesforce as well. Duolingo's interesting. I look at that one and I think about how well that's done in like the last year. The stock's up 150%, and I remember when everybody was just so negative on Duolingo. Like, the stock absolutely tanked during this time frame. I went all the way down here to like $72, and there was a lot of talk about the education kind of providers like this, and everyone was so negative on it. Like, I remember everyone being so negative on it. And I actually looked the other day, and there was this article on Seeking Alpha, 18th of October 2022, which is basically where the bottom of the share price is. And you can actually see this is a year ago, and the stock is up 100% since this was posted. And you can see here, like, the negativity that was here, even though it was being absolutely battered. This article goes on to say it's trading at a hefty valuation still, and they can buy this at a lower price. And the classic kind of things that were put on a company that is in this negative sentiment, and people going, oh, insider selling, look, even insiders are still selling the business and all this. The people that are when it gets the most negativity out there, it's normally it can be towards the bottom of the stock. And also that, sometimes insider selling doesn't mean anything, because insiders sold the shares, probably sold it after their IPO, after the lockup period ended. They probably would have been able to sell the shares probably around this time frame. So that's why insiders were probably selling the stock. And then you have all that negative sentiment, people using that as a negative reason, and the stock goes up since that time frame. It shows you sometimes when that negative sentiment out there, those can be the best buying opportunities out there. And I never really paid much attention to it, but it made me laugh the other day when I saw the share price, and I was like, I remember everyone being really negative on that one. So yeah, Celsius, we did get onto Celsius anyway, and then we've got a couple more companies reporting earnings that I'm not too particularly bothered about. So we'll go back to the big one, because this is going to be the big one this week, which is Hims and Hers for me. This is one of my top 5 biggest positions in the market at the moment, so this is going to affect my portfolio a lot. I would expect Hims and Hers to have a decent movement. I would expect it between a 5 to 15% move on earnings, and the big thing that's going to move it is the guidance. Guidance is going to be what everyone's going to be looking at and where they guide. Now the stock itself, really, for the last kind of year, hasn't actually really done anything. Anyone in this that bought in that last year hasn't done well. The only people that have done well is anyone that had been buying on that dip. But as I'm sure most of you guys are aware, I started buying this stock in like the $3 range. I have averaged up. I think my average sits around about $6-ish at the moment. So yeah, I set up a decent amount. I think I'm up about 50% on this position. I used to be up a lot more. I actually, during April time, I think I sold about 10% of my position off, and it was for a 100% gain. So it was another member into the 100% return club. I just felt the share price had gone up a lot during that time frame. Thought it might have a bit of a cooling off phase, and it did. And I was expecting it to go to like $9, but the fact that we actually went all the way back down to $6 meant I was buying Hims again during this time, which was crazy. And since then it has started rallying up. But for me, I do have a good average. I have made money on the position, and I have been buying during this dip, and we have seen some recovery here, but we haven't seen it really break them 52-week highs for a year. And I think that we do have a chance to do it on this earnings if the numbers do go right. Looking at the earnings, the growth is for 47% year over year, which is just absolutely fabulous. The EPS is expected to go from a loss of $0.05 to a loss of $0.02, which is a really good improvement. I think it's time though that we do want to see profitability start ramping up on an EPS basis now. I think that when you have this combination of good growth and also profitability and positive EPS, we've seen it with the likes of DraftKings. That can be a major catalyst of where people go, whoa, so we've got a company that's growing so fast and is also now driving up profitable and is profitable. I think Hims and Hers will get a lot of reflection if they do that. So I think that we do want to start seeing them pushing up into more positive profitability and EPS numbers now. Even though it's moving in the right direction, I think we need to take that step across, and even if that means cutting sales and marketing and cutting costs and even cutting the growth down a little bit, that's what I want to see them do now. Now, looking at the next quarter and the guidance, it looks like analysts are forecasting quite a big slowdown in revenue growth, like 65% growth down to 26% growth. Even though 26% growth is absolutely amazing, I would expect Hims and Hers to do more growth than that. I would expect them to go more, at least into the 30% range. This is the big thing on guidance. We want to see a good hike up in that revenue guidance. On an EPS, they're expecting a loss of 0.06. Same again, I would like them to have a profitable year, especially if they are doing only slower growth. That should mean that they don't have to spend as much into sales and marketing, and they should start moving into profitability. So I'll be honest with you, if they do come in line with these numbers, I would be very disappointed, and I would expect the share price to react quite negatively to that. But I am expecting them to hike up this revenue guidance, and like I said, at least start moving in the right direction, which they would do, and that would still be a big improvement from where they were. But the ultimate combination I want to see is good growth, but also positive EPS. The only way that I would be okay with them not moving into positive EPS is if they were going to grow at like 50+% a year. And if they did this EPS improvement with 50% growth, I'd be like, okay, yeah, they haven't got to the positive EPS yet, but still look at the growth, it's very good, and it's still doubling in an improvement basis. But realistically, I'm at the point now where I would be willing to sacrifice the growth a little bit to ramp up the profitability. I think that Hims and Hers to start getting reflected a bit more on the share price point of view and prove a few people wrong is to get to that profitability mark. I think that's what they've got to be looking at, and I think if they do that and they do have 30+% revenue growth, yeah, I think that's the catalyst to try and break those all-time highs of $12, and if they can do those numbers, I think that's how they do break it, because I think it's a matter of time before we do see Hims and Hers get to $12. In my opinion now, Hims and Hers should be a stock that is more value to $12 to $15. That's where I think they should be right now. So if they were to still do great growth and start ramping up to that profitability, I think there's no excuses why Wall Street is still sleeping on it, because I think they have been sleeping on this stock, and I think it should be higher. And given if they can do that profitability, I think it just gives them no room to kind of like, so why, what's wrong with it now? Why are you not buying it now? Because I think that would prove a lot of people wrong, and a few of the bears that are still out there on hims and hers anyway. So that's the video for today, guys. On a Sunday, I will not see you on Monday because I did do the video today, so I'll see you on Tuesday, and I'll probably do a review of hims and hers earnings more than likely. So I'll see you then, guys. Hope you enjoyed the video. Quite a lot of stocks mentioned today and a lot of rambling on. It was a bit of a longer video today as well, so let me know what you think about that anyway. And yeah, thanks for watching. See you in a bit, guys.